Hi guys, today we will discuss Essay 320 Materiality in Planning and Performance of Audit. What is materiality? We know the amount of fraud and error will influence the economic decisions of the users. That is known as the materiality, the gravity. So before moving further into the concept, I will give one example. I went a mobile shop. I am selecting one mobile which costs 20,000 rupees. I have 15,000 rupees budget. That influence my economic decisions. I will move for a lower cost, 14,000 for or 13,000 for. So this is one example of influencing the economic decisions. Okay, now we will move further the concept. There are various users who depends on the financial statements for their needs. Various users have various needs. Shareholders who looks for liquidity positions, debenture holders who look for the solvency positions, banks who looks for solvency positions, tax authorities and governments might look for the profit position. So various users are there in the financial statements for various needs. We can't cater all people specified needs, but all those people have a common needs. Auditor will take into consideration of the common information needs of the various users on a common platforms. And a fraud and error has happened. If it affects their economic decisions, banks will tell banks further not lending them the money. Creditors does not give the credit period for further, they are winding up. Shareholders, one fraud for an example something has happened. What was the share prices? The share prices become colluded. So various ways it impacts the economic decisions because of the fraud and error. We have to prevent not to happen it further. So what auditor will do? Auditor will fix an amount. What amount will influence the economic decisions of the users? How it will understand for an auditor? It's purely based on the auditor's professional judgment. Number two, the information needs of the various users. Number three, the size and nature of the organization. Biggest organization, small amount of misstatement, fraud and error may not significant or material for them. For me, 100 rupees may not be material, 1000 rupees may be material. For others, 100 rupees may be material for them. So it's based on the organizations. How auditor fix that amount? First steps involved in that, there need some measures, some standards. For an example, profit-making organization, we can adopt a standard as profit before tax. I am taking profit before tax, I am applying certain percentage. So I am arriving a figure. For an example, 10,000 rupees. Anything above 10,000 rupees, expenditure or whatever it may be, it is material. If a fraud happens for that amount, which will influence the economic decision. So I will take utmost care. I will do the detailed checking of that. Any amount above 10,000, detailed checkings will be done. I will check whether there is any fraud and error is existing that. I'm taking more care on that aspects. What will happen if smaller amount, 1,000 rupees, 2,000 rupees, 4,000 rupees, these are not at all material for that organization on individual basis. I am taking on individual basis. 1,000 rupees is not at all material. 2,000 rupees is not at all material. But I am taking it on aggregate basis, which will exceed my materiality level. If exceed the materiality level, it will influence the economic decisions. So, in aggregate basis also it is relevant. Aggregate basis also should not exceed, or the individual basis also should not exceed the materiality level. So what I will do, I will bring down my performance materiality level. It is known as performance materiality level. I'm fixing a materiality level. I'm taking care that the small fraud and error, misstatement, in an aggregate basis should not eat up my materiality level. So I will fix another amount as performance materiality, and I will detailedly check on the individual transaction whether it is exceeding my materiality level. So the benchmarking techniques is very important. First steps in materiality is fixing a benchmark. How should this benchmark should be fixed? It's based on the industry. Some profit driven organization, profit before tax will be taken as a base, applying a particular percentage as materiality and bringing down a smaller amount as performance materiality to ensure that the individual small amount, insignificant amount in together should not exceed my materiality level. So benchmarking is first step. For the profit making organization I have discussed. What will happen if the profit is volatile? I can't take it as a base. Why? Because it's volatile. Year after year, it's not showing a consistent figure. So I can take gross profit. Some organizations is not a profit based. Can take the expense, total expense. We can take the total asset, net asset. All these we can take as a benchmark standards, benchmarking. So this is the main discussions in the materiality, and fixing the materiality is an exercise of auditors' professional judgment. And thank you for watching this small video, and have a nice day.